Hey everyone, welcome back to Corporate Decoder. Today, we're diving into XPO Inc. and their latest announcement about buying back their own stock. It's kind of like when you find out your company's having a potluck and realize you forgot to bring anything. Awkward. Let's see if XPO's announcement is just as surprising. XPO has just announced that their board of directors has given the okay to buy back up to $750 million of their own company stock. Basically, they're saying they think their stock is worth more than what it's currently selling for, so they're investing in themselves. This new plan replaces an older one from February 2019. The old plan still had $503 million left as of March 26, 2025. So they're not just starting from scratch, they were already buying back stock and now they're upping the ante. Now, how are they planning to do this? XPO has a few options. They can use something called a 10b5-1 trading plan. This is basically a pre-arranged plan that allows the company to buy back shares at certain times and prices, even if they have inside information. They can also buy shares on the open market, meaning just buying them like anyone else. Another option is privately negotiated transactions, which is when they buy shares directly from shareholders in a private deal. All of these methods have to follow the rules set by the Securities Exchange Act of 1934. The timing and the amount of shares they repurchase depends on a lot of things. These factors include the stock price, how well the company is doing, the overall state of the market, other possible investments, and how much cash they have available. They don't have to buy back any specific amount of stock, and they can stop or change the plan at any time. Here's where things get a little cautious. XPO includes what are called forward-looking statements. These are basically predictions about the future. They use words like anticipate, expect, believe, and plan, but they also warn that things might not go as planned. There are risks involved, things like changes in the economy, political events, legal issues, problems with the supply chain, rising costs, and labor shortages could all throw a wrench in the works. They mention the ability to align their investments with customer demands and to improve their North American LTL business, which could point to previous challenges they might have had. They also talk about the benefits of selling off or spinning off parts of the company, like they did with GXO Logistics and RXO, mentioning the anticipated benefits might not come true. Cyber attacks, data breaches, debt, and interest rate changes are all potential problems as well. Basically, XPO is saying, here's what we think will happen, but a lot of things could change, so don't hold us to it. These statements are only relevant as of March 27, 2025, and they don't promise to update them unless the law requires them to act so. What does all of this mean? XPO seems to be signaling confidence in its own future. By authorizing this stock buyback, they're saying they believe their stock is undervalued and that the company is in a good position to grow. However, they're also being realistic about the potential risks and uncertainties that could affect their performance. Let's break it down. On the plus side, this buyback could boost the stock price, which is good for shareholders. It also shows that XPO has enough cash to invest in itself, which is a sign of financial strength. But there are also potential downsides. If XPO uses too much cash on the buyback, it might not have enough left over for other investments or acquisitions. And if the company's performance doesn't improve, the stock price could still fall even with the buyback. Overall, this announcement is a mixed bag. It shows confidence, but also caution. It's up to investors to decide whether they believe XPO's optimism is justified. Now, let's talk about my take on XPO's direction. From what I see, XPO is trying to streamline its operations and focus on its core businesses. The spin-offs of GXO and RXO were part of this strategy, and the stock buyback suggests that they're confident in their ability to generate cash. One notable risk is the potential for economic headwinds. If the economy slows down, demand for transportation services could decline, which would hurt XPO's revenue. They mentioned the anticipated impact of a freight market recovery, so their existing results might not be great. Another risk is competition. The transportation industry is highly competitive, and XPO faces pressure from both large and small players. However, there are also opportunities. XPO could benefit from the growth of e-commerce, which is driving demand for logistics services. They could also expand into new markets or acquire other companies. In conclusion, XPO seems to be on a reasonable path, but it faces challenges and opportunities. The stock buyback is a positive sign, but investors should carefully consider the risks before investing. It is worth keeping an eye on this company to see if they can deliver on the promises and if the forward-looking statements are just PR or reality. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more corporate deep dives. Let me know in the comments what company you'd like me to decode next.